A bit, the estate tax quickly becoming a hot button issue under the new administration. Just how much should inheritance be taxed? Here to debate it, our president and CEO of the American Council for Capital Formation, Mark Bloomfield, and professor of law and public policy at NYU, Lily Batchelder. Good of you, both of you, to joining us. I'm going to start with you, Mark, because it looked like that the estate tax could, well, it might disappear. No. Say no. Not going to happen.
Unfortunately, it's not going to happen, I don't think.
And Mark, what is your central issue? Why shouldn't that happen when we're facing trillions of dollars in a budget deficit in the coming years trying to rescue this economy? We got to get the revenue from somewhere.
Well, revenues is one component, and the reality of the situation is that you really aren't going to get much revenues because a lower estate tax provides for a lower cost of capital, more investment, more jobs. You need savings for long-term economic growth and revenue. You don't get it with an estate tax. So that's one. If you want revenue, don't increase the estate tax. Secondly, it's unfair. Look at Sam Spendthrift. He spends all his money, has no estate, doesn't get taxed. Frank Frugal invests in America in companies, and he gets the economy going, and he gets taxed. And then finally, revenue increases, you've got more investment, and I think it's unfair to have an estate tax. Most of the countries in the world have a lower estate tax than
Lily,
we have.
we should point out the idea out there that's been talked about from the Obama administration would keep the current level of exemption for an individual at $3.5 million at the 45% rate, which is certainly better than what we had during the Clinton administration.
Well, I would actually argue that we should not only keep the estate tax, but think of raising more revenue from it. It's both critical for the fairness of the tax system. We actually tend to tax people who are self-made less than people who inherit their wealth. And the estate tax is borne by those heirs. It's also just not the time to be cutting taxes on heirs. We should be spending money and giving tax breaks to people who need them and are going to be spending the money rather than saving it.
Mark, I've got two words for you to sum up why we should maybe even reform how estates are taxed. Paris Hilton.
Well, I have no problem with Lily. I want to tax rich people. I want to tax them if they spend money like Paris Hilton. I don't want to tax them if they invest, which will encourage the economy to grow. And I don't want to tax them if they save, which is the long-term answer to our economic problems once we get over the problem of stimulating the economy.
Yeah, but right now, if you tax consumption and you tax work, those are going to be more detrimental to the economy in the short run.
Oh, I agree. There's two effects going on with the estate tax. One is by having certainty. What you're doing is you're encouraging the entrepreneur to invest, the family business. He's not going to invest right now if he knows the fruits of the labor are going to be taken away. So there's a short-term stimulative effect, especially with investment and entrepreneurship. Long-term, which is what we really need to worry about. If you're talking about jobs and income inequality, you need a strong economy. And we have one of the highest estate tax in the world. Out of 50 countries we surveyed, 25 don't have an estate tax.
And Lily, it is worth go ahead, Lily, just jump in here.
Well, first, many countries have a wealth tax, so we actually don't have a particularly high tax rate on wealth and wealth transfers if you take both into account. But the other point is that the evidence just doesn't support that people change their behavior in response to the estate tax. They don't save less, so it's actually a very efficient tax. It doesn't particularly change savings behavior, and you're ending up making sure that you're taxing the Paris Hiltons of the world at least a little bit closer to their assistance.
But Lily, another argument against it is that the super wealthy have plenty of planners out there that they can pay to help, but it is your smaller business people and your farmers who would get hit by an estate tax.
Well, there certainly is a lot of planning, but affluent people tend to have very good tax planners for all taxes that affect them. I believe that some of the proposals discussed in Congress would look at simplifying the law to some degree so that very basic planning devices it would be readily available to everyone. But I don't see this as particularly an issue that is more prevalent in the estate tax relative to any other tax that is hitting the super rich.
Lily, thank you for being here. Mark, you got 2 seconds. Final word.
You want an employment bill for lawyers? Keep the estate tax so you can let rich people get out of it.
And accountants, thank you. Mark, thank you for being here. Mark Bloomfield and also Lily Batchelder. This is an issue that's not going to go away, so you're both welcome back anytime.